good morning. Welcome back to my channel. All right, in today's video, I'm going to share to you how to approach the market from higher time frame to the lower time frame, which is to the entry point. All right, how I approach the market and what I look out for in the market. I look out for only 3 to 4 things. Let me just say I look out for 3 things: market structure shift, liquidity, and then point of interest. Just as you can see in this chart, this is just me back testing. I back tested yesterday night, which is the day market closed. So, and the trades that I have taken so far this week, I've not taken trade on Monday. I've not taken trade on Tuesday. I've not taken trade. Okay, I took trade on Wednesday, which eventually led to loss, and I didn't take trade on Thursday, and I didn't take trade on Friday. So it was only one trade that I took this week so far. All right, so this is a 30-minute chart. Let me go quickly to 4-hour chart. All right, as you can see from the look of all things, just as the market was dropping down, and where the market came and bounced off from, it bounced off of this breaker block, right? Just at this breaker block, it bounced off of it and it began to shift structure from the upside. So as I have marked it on 4 hours, knowing what point of interest the market has tapped from, which is a breaker block that is highly highly influencing the market. I know that when it reacts to a breaker block or an order block from the higher time frame, it will influence the movement of the market or of the chart. All right, so knowing that fully in mind, then I drop to 15-minute time frame directly. If I drop to 15-minute time frame, in that same spot, what I will be looking for, I will be looking out for a market structure shift, which I got here. You see, a market structure shift. So immediately after a market structure shift, what I will look for is a pullback, right? After a market structure shift, then my liquidity, which is this one, this low here, and then the point of interest will just be below the shift of structure. But it didn't happen here. Then it went ahead and still break another high, and then break another high, and then broke this high last finally, and it pulled back and broke another high. So, all right, it pulled back from here and then broke this high and then this high. So I consider this to be a double break of structure and then a single break of structure. So now where are you going to make your entry? You have to understand that a high that market takes out or a low that market takes out, the body of the low or of the high becomes a key level. So this is a breaker block, and then this is another block that influence the move to the upside. All right, so this is also a breaker block. So my inducement is this low here, this low right here, this little pullback before the market push up and then comes back to this. I use this breaker block as my point of interest. I think I use the 30-minute for that. Yes. So you see, this is purely another block, a breaker block that I use for this entry. And also, break of structure happened here, a pullback from it. This is a double structure, and then I pull back and to a breaker block to the upside. So this was where I got my entry. As I look at the chart earlier, I mark up this place and I found out that okay, this this high and this high are equal. But what made me think of selling was because of this high and a low and a higher high and a lower low. So I considered this to be a break of structure, right? At that time. So it is what it is. So a break of structure here, a break of structure here, my inducement here, and my point of interest here, which is this other block. So you see, I had my entry there, and my stop loss just above the body, and my my take profit is just this low. That is the next draw on liquidity. So I think my stop loss was tighter. Yeah. So as the market tapped me in, it tapped me out immediately. So I didn't chase the market. That was my one entry, which I had. So this is consistently what I look out for in the market, and that's what has gotten me this far. I've passed my funded my challenge account phase one, phase two. I'm in the funded account, and this is the first trade I took, and it's a loss in the account, but it is what it is. With this, so I had another setup here, which was the next. I think this was on Thursday. So I had this, yeah, I had this setup, and before you know, I had almost the same setup on Euro USD. So that's why I just stick to one rule that I said, that it's 1 PA that I trade. But then I shift to this thing, Euro USD, which didn't happen. You see, I had the same setup on Euro USD, which the PA didn't come up, and it just created a lower low and then went down. You see, so this was the setup that I had on GBP USD. Hadn't been I stayed to GBP USD, I would have gotten tapped in. But I had the markup. I analyzed like 6 different PAs that day. So I sent the setup to my community, and some of them participate on GBP USD, and some waited for Euro USD. So we that waited for Euro USD, we missed the setup. So there was no trade that day. In my journaling, I journal no trade that day. So if it didn't come to my point of interest, I'm not picking any trade. So this is a DC break of structure, or market structure ship. I think it started from here. So this is a break of structure, and then an inducement, and then it tack into the point of interest in 45 minutes. So you see, it's a breaker block. So it came to the breaker block, so it plunged down to the downside. So that is just it. Anytime you are looking for setup, you have to understand first of all from the higher time frame, what where has the market tapped in. So you see this low where we had this shift of structure to the upside was this place. So it's in 5 minutes where I came and saw that this is actually market structure shift from here, and then an inducement here. These lows were inducement. So you see, they didn't tap into the other block here, right? They didn't tap into the other block. So the market, as always, market structure shifts, inducement, inducement, and then a point of interest. A point of interest. That is just it. So you see, the market came and tagged into the point of interest here, and then after it tagged that place, so it made a market structure shift, and then the inducement and a point of interest again for the buy setup. So in the funded account that I am using, the program don't allow news trading, so I didn't participate in this trade. Actually, I had this setup to participate here, and I have a sell setup here to go down. Yeah, just this place. So you see, it came and tack into it and sold to this place, which is also still a breakup structure. And in this main here, though but this is a 5 minute time frame. If it's where in the, I think the inducement was in the 15-minute time frame. So you see, a breakup structure with this week here, and then an inducement here, inducement here. Sorry. So an inducement here, and then a point of interest here, then buy. So this is just actually how I approach the market in a top-down analysis. So in the higher time frame, I check what point of interest the market has tapped into or is typing into that will influence the movement of the market at that moment. Because the higher the time frame, the longer it would take for the market to react off from. That is it. If it's in the daily time frame, if the market tap into a breaker block or an order block, so it will take time for it to at least the reaction would take more time in going up. So let's just say a daily candle just tapped into this place. So just this bearish, this bullish candle here that just goes up here. If it's in the daily time frame, that's a very big move. If you drop down, you find out that wow, this move is very big. So that is it. The higher time frame is for me to check what point of interest the market has tapped into, and then I drop down to 15-minute time frame because I drop down to 15-minute time frame to check my breakup structure or market structure shift, and then a pullback, an inducement, and then a point of interest. This is consistently what I have been working out with in the market, and this is what has been gotten me um, a lot of trade setup. And this is just it. It's just a structure. You need to have a structure. You need to play. You need to trade your. You need to plan your trade and trade your plan. So this is it. It's just as simple as it is. 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 So a breakup structure, a point of interest, sell. Breakup structure, point of interest, buy. So that's it. Breakup structure, inducement, point of interest, come back to it, you sell, you buy. Breakup structure, inducement, point of interest, you sell. That is just how it is. This is how I approach the market. If it's in the higher time frame, this just pushing up, it will be very big move. So and my take profit is above the next draw on liquidity, which is this place, or in the selling, which is this place. So it's just very simple if you'll learn how to simplify those things and uh, try to approach the market consistently and check if the system works or not. Okay, that is just it for now, and I hope you guys have found this video insightful. This is all how I approach the market. Is if as you can see, it's very common in my videos. This is how I approach the market daily, every day, every single day, and it has gotten me a high win rate. High win rate. If there is nothing that has market structure shift, inducement, or point of interest, I don't pick trade. Sometimes you lose, just as this place. Yes, because if you lose, you even know, you even see why you lose. So I saw that I the market actually referenced this to be an equal inducement, right? So the point of interest is just slightly above it, and I adjust my mistake, and then I analyze this market very well, and here it is. But I didn't participate in it, so it's actually okay and it's fine. I know the curve will be fine, all right, because my curve is somewhere like this. So I know next week it will just be up. So that's how it is. It is what it is. Every day you need to understand, you need to know what you're looking for in the market, and when you know what you're looking for in the market, it will reduce your stress in the market. It will reduce your the hour you spend on the screen. So that is it. I hope you guys find this insightful. So I wish you all the best. Thank you.